It's a beautiful morning from this part of the world. And how are you doing today? So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. So, I want to see some response. If you can see my screen and you can hear my voice clearly, kindly type in hi so that we can get the session started. Are you good to go? Ooh. All right, so let's see what's happening here in the comment section. All right, thank you very much. 432 534 323. All right, thank you very much. So let's take this as a confirmation that we are good to go. Right? Okay, so I welcome you to yet another promising session on the Extra and Speed Life Hub. And my name is Sharif Daramola. In the next 1 hour, I shall be taking you on a trading journey where we shall be evaluating the financial markets using technical parameters to identify trading opportunities lining up for us today. Well, as usual, we are going to be looking at the pairs we have been monitoring since Monday. We are going to be looking at how well these pairs are doing. Then we shall be deliberating on what our expectations will be like for today. So without further ado, let's dive into the charts and let's see what is going on in the market right now. Well, before I go into the details on the chart, I want us to quickly look at the economic calendar, as we have a couple of events coming up today, which from my own point of view is likely going to be having a major impact on one or two of the major pairs we have been monitoring since the beginning of the week. And if we look at the economic calendar here, we can see we have a macroeconomic event which appeared to have happened, and that is the core harmonized index of consumer price. So this happened like a couple of minutes ago. So we have 5% here, which is the deviation is 0. So there is not much difference at that point. Then we also had the Euro harmonized index of consumer prices, which came with a negative figure with a deviation of minus 1.67, which is not a good data for the euro. So we are going to be looking at how this is affecting the pair, that is the Euro USD. Then we also have the ADP employment coming up in 2 hours from now. We have the ADP employment change. We also have the GDP annualized for Q3. Then we have the Fed's chairman speech coming up also later on in the day. That is like 8 hours 30 minutes from now. So we are going to be anticipating this event, and we are going to be looking at how participants in this market are anticipating this event, and we shall be seeing the reflection of how participants in this market are looking forward to this event in the form of price action. So with that being said, let's dive into the charts and let's see what is going on in the market right now. So as usual, the first commodity we are going to be treating here is the US oil. So on the US oil, what do we have here? So where are we as at during the live session yesterday? So let's quickly do a quick recap of what our expectation our expectations was prior to the New York session yesterday. So we were around this area. Hold on a second. Okay, so we were around this juncture here during the live session yesterday, and I told you how important that level is. And if we look at the structure here on the 1 hour time frame, if I zoom out a little further into what has been happening here since in the last 3 weeks here, we can see that we have that bearish trend line figured out. And in the last 2-3 weeks now, price action has continued to respect that trend line, holding selling pressure on the US oil, and we can see how this has been. We took advantage of this bullish opportunity here on Monday, which gave us about 400, 430 pips thereabouts on two positions here, which took us right back into that bearish trend line. And one thing I said here yesterday is the fact that the structure we have at this point is a very critical one, considering the fact that we have a sensitive confluence around this area. And what do I mean by that? If we look at the bearish trend line here, you can see how it falls into this area around the $78.50 level. We also had this bullish trend line, this temporary bullish trend line figured out, which was broken on Friday last week. We saw price come back into that trend line as well. So we are at a very critical point yesterday, and I told you that we shall be looking forward to either a selling opportunity from here or a buy opportunity. And in order to make our trading activity easy for us for yesterday's New York session, we were using this $78.50 level as a yardstick for trading opportunity. And what I said here was quite simple. I said if price breaks down, retests the structure to the downside, we want to be looking out for selling opportunities after price breaks down the structure, comes back to do a retest of structure, followed by selling pressure below that area to incite another wave of bearish momentum, and at the same time respecting this bearish trend line one more time. Though we had a breakdown of that structure yesterday, we saw the breakdown of the structure where price moved about, how many pips was that? About over 150 pips in that direction before we started seeing that bullish momentum come in again at this point. Well, you must have taken advantage of that move, and definitely you must have moved your stop loss as soon as price moved significantly well in our favor, and price took us out of that structure. And we can see what has been happening here since price came back into the $78.50 level since the later part of the New York session yesterday. So what we've been noticing around this area is more or less a bullish pressure, buying pressure around this area. As we can see, every attempt by the sellers to break down that $78.50 level has been met with strong resistance from the buyers, giving us a clue of a possible uptrend situation here. So now during the opening of the UK session today, I actually shared this on my TradingView platform, where I said if price breaks out of that bearish trend line here, we want to be looking out for buy opportunity. But a couple of hours ago, I published that because of the buy bullish momentum I've been noticing here in the last 3 to 4 hours, I'm of the opinion that it's a good area to buy the US oil, and that's exactly what we did. So right now, if you are taking advantage of that move, kudos to you at this point. If you are taking it right from the $78.50 level right above that structure, what I want to be saying here, move your stop loss to break even at this point, and let's see how price action will play out for today. Now, with that being said, and for those who had missed out on this opportunity, so what we are going to be looking at today is to see if the market is going to be giving us a second chance or another opportunity to either add more position to this trade, or we are going to be having a new trade outrightly. That is for those who missed out on that opportunity. Now, going into the New York session today and during the early hours of today, the next thing I did here was to identify the $79.50 level here. And if you look at how this level has been a major determinant of price action since last week, that is on Friday, we saw how our selling niche came in around this area, pushing price to the downside here. And in the last 48 hours on the US oil, we have been witnessing selling pressure from that area to signify how important the sellers are at this point in the market. So now, if we are going to be buying the US oil, well, definitely we want to be looking out for a situation where buyers push price above the structure here, break out of the $79.50 level, hereby taking out all the selling position around this area to gather some liquidity to push price to the upside. And this is exactly what happened in the last hour, as we saw a final breakout of that structure. In fact, it was an engulfing candle, which is a strong signal that price is likely to start another wave of a bullish momentum at this point. So what this simply means is that a breakout of the structure is more or less a bullish signal here, and price appears to have done a retest of the structure, as we can see a sharp rejection of this level, and we can see bullish momentum continuing to the upside around this area. So my advice at this point is that anywhere right above the $79.50 level is looking very promising to join the trend continuation to the upside. So what this simply means is that following this impulsive move that we witnessed since the beginning of the week, we can see the consolidation phase here now turns out to be a trend continuation pattern, which appears to have given us a signal that price is likely going to the upside. So if we bring out our line chart here, so let's make things a little bit easier on the high so that we can have so we have this structure here. So we have a bullish, a trend continuation pattern here in the form of a wedge, as you can see here now. Excuse me, I'm having a little cold this morning, so I just hope my voice is not is clear enough for you to follow along with me. Please bear with me. So we have this higher lower highs figured out at this point. Then we have the higher lows here. So we have something like a wedge here, which is more or less a trend continuation pattern. Hold on a second. Let me bring back my candle chart here. So for the sake of clarity, let me show you what I was able to identify here. So we have this. So we have the situation here. So now what did we see here this morning? We finally saw a breakout of the structure here, giving us a bullish signal. Well, from a technical standpoint, whenever we have a breakout of the structure like this, we expect that at one point in time, there is a likelihood that price might come back to do a retest of that structure. So there is a likelihood that we might be having a situation where price comes back to do a retest of this level, followed by buying pressure on the lower time frame. Then we could actually add more position to the existing trade here. So this is what I'll be looking forward to buy the US oil for today. Let's see. Okay, so that's what we have here. But right above the $79.50 level is very, very good to buy. So if you can afford to have a stop loss of about, let's see, about 100 pips thereabout, well, you could join right above the $79.50 level. And if price tend to go to the downside here, we know that we're expecting that price will do a retest of the structure. That will likely give us another wave of a bullish momentum here. So that is what we are going to be looking forward to on the US oil this morning. And for the take profit target, well, I will be suggesting that the $85 level should be an area we should be looking for the take profit target, which should be giving us up to about 650 pips thereabout on this one. And there is a catch here. As soon as price continue to move to the upside, as soon as it gets into the $82 area here, remember we have a structure around this area which has a tendency for selling potential there. So we want to be moving our stop loss to lock in some profit, as we don't know how price action might relate to that structure. So there is a tendency that we might be having a reversal pattern here that might send price back into that bullish trend line to incite another wave of a bullish momentum. And if price breaks out of that structure, then a retest should be giving us another opportunity to add more position to our existing trade on the US oil. So that is my view here. It's a very simple setup here. So let's continue to look out for anything right above the $79.50 level as a comfortable place to join a trend continuation to the upside. With that being said, we also want to take into consideration the possibility that price might likely come to the downside. So we want to keep our options open, despite the fact that we are running a bullish position at this point. We also want to keep it open in such a way that if price takes us out of the buy position here, breaking down the bearish trend line, at the same time breaking down the $78.50 level, then we want to be seeing this as a bearish signal. But remember, we are not getting too excited. We want to scale down to our lower time frame. Look out for selling pressure right below the structure here to incite another wave of bearish momentum back into the channel that we were in at the beginning of the week. Well, at this point in time, I'm not sure that's going to be happening because the structure we have here is looking more bullish to me. And the reason why that is simply one, we have a breakout of that trend line that has been holding selling pressure in the last 3 weeks. And what it simply tells me is that that trend line is no longer strong enough to hold or to negate any bullish momentum here. So we had a breakout of that structure, and in the last 48 hours we have been witnessing a situation where price has been trading right above that trend line, and then with the final breakout of the sell zone here at the $79.50 level, that is another sign, that's another confirmation that we want to be going to the upside on the US oil. So I will be taking the next 10-15 seconds to read through the charts. If you have any questions regarding what I've just explained so far, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. So what do we have here in the comment section? Good morning, innocent babe. Glad to have you around. Trust you're doing well. Hi, Max. Good morning to you. 0117, good morning. All right, so we have 662, good morning. Trust you're doing well. So I guess there are no questions. So I want to assume that we are all on the same page here on the US oil. All right, innocent baby, I'm glad to hear you are doing well. Okay, so in the absence of no questions, I want to be moving on to the next option. And the next option we are going to be looking at today is the US tech. And in fact, the US tech was a very profitable trade for us yesterday. For those who are part of this journey yesterday on the US tech, kudos to you for being on standby to take advantage of that move. So what has been happening here since last week was we've been witnessing a very strong bearish momentum here. Remember, we joined this bearish momentum last week somewhere around below the $11,900 mark area. And since then, price has continued to run to the downside. So we already have, let's say from here to here, we have over 365 pips. That is not bad anyways for a start. And we took advantage of this opportunity here at the beginning of the week. Remember, right below the 11,700 after citing selling pressure there, price moved a little further into the 11,650. Then we saw another rejection, price came back into this area again. We sold at that point. And during the live session yesterday, we were taking this impulsive move into consideration, where we said all this buy momentum we are seeing here is likely going to be a retracement of that impulse leg. So we were around this area yesterday during the live session. We saw a rejection. I took advantage of this move, which I shared with you, and I said for the New York session tomorrow, we shall be using the $11,650 level as a yardstick for selling opportunities. So right below the structure is an area we said we are going to be joining the decline to the downside, with the take profit target sitting right around the demand zone at the $11,500 mark. So yesterday we had about 170 pips here. So kudos to those who took advantage of this opportunity here. Now, what happened during the early hours of today was quite interesting, as we started seeing buying pressure again coming in right around this demand zone area. And if you look into the past here, you can see how this level at the $11,500 level has been holding buying pressure in the last 2 weeks on the US tech. So you can see we had a demand zone here figured out, and again we started seeing buying pressure around this area. So what I did here, immediately we start seeing reversal pattern, the next thing we want to be doing is to identify a neckline that we shall be using to guide our trading activities. And a neckline was situated at around the $11,525 level. If you look at the structure here, we can see how sellers has been rejecting that level. Not until a couple of hours ago, we finally witnessed a breakout of that structure, which is likely going to be a bullish signal that will be sending price going further to the upside at this point. So we saw a breakout of the 11,525 retest of structure, and it was a good opportunity to join the rally to the upside. If you are taking advantage of that move, kudos to you for being on standby. So what we want to be doing at this point is to see if the market is going to continue to the upside. And to make the job easier for us here, I was able to identify the connect the series of higher lows here. So we had higher lows here since the later part of the New York session, as we saw a bullish momentum coming in here. So I drew that trend line. And one thing I said here is that I'm hoping for here is that price will continue to respect that bullish trend line here. And if it does, I want to be comfortable in my buy position as long as price continue to oscillate right below either the $11,525 level or the bear bullish trend line at this point. So if price continues to the upside in such a way that we start seeing price come back into the trend line again, followed by buying pressure on our lower time frame, we want to be adding more position to our existing trade. Now, there is a catch here that we need to also take into consideration. And what is that? Well, if you look at the structure here and look at what has been happening here in the last 3 weeks, we can see that we have been on a long-term bearish momentum as price action has continued to find lower lows and lower highs. And this bullish momentum that's taking advantage of here, I will be seeing this as a retracement move. There is a likelihood that price might retrace into probably the 11,650 level, a structure which was broken during the New York session yesterday, which we saw here. And from a technical standpoint, whenever we have the breakdown of a structure, we expect that price might likely come back, do a retest of that structure to incite another wave of bearish momentum at this point. So what I'll be advising us to do here is we want to be mindful of this position that we have taken advantage of and continue to guide our position judiciously by moving our stop loss accordingly. And as soon as price gets into that $11,650 level, we want to see how price is going to relate to that structure. How we're going to be having a reversal pattern within that area that will incite another wave of a bullish momentum, hereby breaking down that bullish trend line, retesting that structure to send another plunge to the downside. So that is one scenario we might be looking forward to. And if possible, price breaks out of the $11,650 level, comes back, we find buying pressure right above the structure, then we want to be adding more position to our existing trade here on the US tech. Now, we made mention of how important the $11,500 level has been since in the last 3 weeks here. At least the second week of this month, we saw how buying pressure was noticed around that $11,500 level. And remember, we had a reversal pattern identified on the daily time frame. Let me quickly show you that. And that's reversal pattern. The neckline of that reversal pattern is this demand zone here. And one thing I said yesterday was that if a breakdown of that demand zone happens, well, that's the breakdown of the neckline of that reversal pattern, and this might be giving us a confirmed reversal pattern in such a way that a retest to structure might likely send price going further to the downside. So that is another opportunity we want to keep open at this point. So let me scale up to the daily time frame so that we can see how important that $11,500 level is. Now, scaling back to the daily time frame, well, the first thing we observe here is that price action has been on a long-term bearish momentum here. And as a result of this, we were able to connect the series of higher lows to give us that resultant bearish trend line. And, well, the most important structure here started at around the month of June, as we saw attempt by the sellers to push price to the downside, negated by buying power. We saw that happen here in the month of June. The same thing also happened when we fast forward into the month of September, though the buy pressure around that area wasn't strong, as we saw how sellers took over the market again at around the $11,700 area to push price to the downside, and in fact shifted that demand zone one more time to somewhere around the $10,500 level. Now, look at how important key level is. So the $11,700 level is this area here. And I told you that we shall be using this level as a guide for trading activities for this week. And we try to understand how participant is relating to that structure. And we said something here that if price continue to trade below the $11,700 level, we might be looking forward to selling opportunity, which has already happened. And we took over 300, is it 300 pips there, about 360 pips on this one till this present moment here. Now, I made mention of this reversal structure, which appears to be unfolding right now in the form of a double top structure. So following this impulsive move, we started seeing a consolidation phase between the $11,900 and the $11,500 level, which I showed you to be our neckline. And we saw another touch here. Price was unable to break the previous high that we had here, and then we have price come back again into that neckline structure. And I told you yesterday that if price breaks down the neckline area here, then we have a confirmed reversal pattern, which might incite another wave of a bearish momentum, which might likely come back into the demand zone or probably into our golden zone area before another wave of bullish momentum happen. So how far the bearish momentum will go at this point is what we don't know yet. But if price breaks down the $11,500 level, obviously we want to be joining that decline to the downside here. So that is the neckline I showed you on the 1 hour time frame. So you can see it here. So we have the neckline here. So if price breaks down that structure, we might be looking to take advantage of another selling opportunity at that point. So if we are going to be looking out for take profit target here, well, I will be suggesting that our golden zone area should be an area we shall be looking forward to take profit target if the selling position comes in at this point. So if we take into consideration this impulse leg here that started at the beginning of the month to this area around the $12,000 level, bring out our Fibonacci retracement tool, run it through the previous impulse leg here, and an area between the 50% and the 78.6% area shall be an area we shall be looking out for our take profit target. So we should be having, hold on a second, let's label this area for clarity's sake. So we should be having a TP target around this level. So we have between the $11,350 level and the $10,900 area. So we should be having a minimum of, let's see, if price continues, a minimum of 180 to a maximum of about 600 pips to catch here if price moves in that direction. And if price continues to the downside, I'm of the opinion that we might be having the beginning of the second wave of that bullish momentum that started this week. So let's see how things plays out at this point. So we continue to look out for selling opportunities right below the neckline area here. So let's scale back down to the 1 hour time frame and let's see what we are talking about at this point. So we are back to the 1 hour time frame here, and remember we have taken advantage of this counter trend opportunity after the breakout of the $11,525 level, and we can see this area also shares a confluence with that demand zone that has been holding buying pressure in the last 3 weeks here. So we continue to look out for that buying opportunity, and let's monitor it judiciously by moving our stop loss accordingly as price action moves in our favor. Now, if at any point in time price breaks down this bullish trend line here, remember we had identified this bullish trend line after connecting the series of higher lows rather, since the New York session yesterday. If price breaks down that trend line, then I want to be seeing this as a bearish signal, which might possibly lead to a breakdown of that demand zone. Remember how important that demand zone is on our daily time frame. That is the neckline of the reversal pattern we identified on the daily time frame. Then at that point, then we want to be selling right below that $11,500 level with a take profit target within the zone high identified on the daily time frame. So that is the perspective we are looking forward to here on the US deck. We are in a buy position right now, running in profit already. If you don't mind, you can move your stop loss to break even, protect that position, and let's see how price action plays out at this point. So remember, I told you how we are going to be looking forward to our price related to the 11,650. If we start seeing selling pressure around that area, this might likely be an opportunity for sellers to break down that demand zone at 11,500, which is also serving as a neckline of the reversal pattern we identified on the daily time frame, which might further send price going to the downside. So if price gets to as far as 11,650, we might be in for a huge profit for selling position here if we can take advantage of a selling opportunity right around that area. And if price does not go that far, we want to be on standby to catch the move if a breakdown of that bullish trend line happens in such a way that it breaks down that demand zone to send price crashing further to the downside. So that is my view here on the US tech. If you have any questions regarding what I've just explained so far, feel free to drop your inquiries in the comment section of this video. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next pair. All right, we shall definitely trade gold. Okay. Francisco, hi, good morning to you. 0731, good morning. Dorothy, good morning to you. Well, I guess in the absence of no questions, I want to assume we are on the same page. So I have no choice than to move on to the next pair. So the next pair we are going to be looking at today is the EURUSD, and on the EURUSD we've been caught within a consolidation phase right now between the 1.03750 level and the 1.03420. This is what we have here. This is where we were yesterday, at around the 1.03750 level yesterday, and we identified the selling pressure. In fact, we had a strong consolidation phase around that area, and I told you I took a position here yesterday. Though during the live session yesterday, I was running a loss yesterday, but fortunately for me, if you are part of this, well, kudos to you as well. Price moved over 50 pips in our favor before we started seeing this bullish momentum coming at this point. Now, with the current structure we have here, you can see how important the 1.03750 level is here. As you can see, price has continued to respect that level. We saw how selling pressure was found around this area during the live session yesterday, and in the last couple of hours now we have been witnessing sharp rejection of the structure here. I hope you are in a sell position already on this EURUSD, because I have a re-entry running at this point in time, as I saw sharp rejection of the 1.03750 followed by selling pressure below that level on our lower time frame. And for me at this point in time, I'm still holding on to my sell position here, hoping that price will continue to the downside at this area. Now, there is one thing that I want to state here, considering the current structure we have here since the beginning of the week. One thing we observe here is that we have been witnessing buying pressure around the 1.03420 level since the beginning of this week, and we don't want to ignore the possibility that buyers could come in at this point. So like I told you yesterday, a breakdown of the 1.0420 level should be giving me a leverage to add more position. If price comes back, do a retest on my lower time frame, then I want to be adding more position to the trade. So if that does not happen, I would not be thinking of adding any position right now. I will continue to look out, stay in the sell position, and let's see how the sell position here will run out before the end of the week. Now, we had an event today, earlier today, that is on the euro. We had a core harmonized index of consumer prices, and then we have the harmonized index of consumer prices here as well, 10 o'clock. And what we have here wasn't a good figure, as the consensus, the variance, the deviation was minus 1.67, not a good data for the euro, and I don't think this really have much effect on this pair currently. So what I'll be looking forward to is we still have an event coming up later in the day. I think we have the ADP employment chain coming up in 2 hours from now, and the GDP annualized for quarter 3. And then we also have the Fed chairman's speech coming up in 7 hours from now. So these are the events that participants in this market are probably looking forward to, and you can see the reflection of this anticipation in this market reflecting on the chart in the form of a consolidation phase here, hereby emphasizing the indecision in this market. So what we have here is simply a consolidation phase between the 1.03750 level and the 1.03420 area. So what I'll be doing here is to readjust my demand zone so that it can fit in to the current structure we have here. So we've been witnessing a demand zone right above the 1.03420. So I'll extend this a little further. So we have a demand zone around here. So for further selling confirmation here, we are going to be waiting for price to break down the 1.0373420 level, taking out all the buy position that we have been witnessing here since the beginning of this week, giving us that bearish signal that price sellers have come to stay here, and if possible a retest of structure followed by selling pressure on our lower time frame. We want to be joining that decline to the downside. Now, there is one thing I would like to share with you here, especially for those who are not part of our session at the beginning of the week, and that is how important the 1.03750 level is for selling pressure in the last couple of months. So if we scale up a little bit to the daily time frame, let's see what we have here on the daily time frame. Now, look at what we have here on the daily time frame. As you can see here, the first thing you will observe here is that price action has been on a long-term bearish momentum. In fact, in the last 2 years, we have been witnessing a lower lows and lower high situation. And as a result of this, we have this bearish trend line figured out after connecting the series of lower highs here. And in addition to that structure here, here's the 1.03750 level, a level which I was trying to show you on the 1 hour time frame on how important that level is. If you go to as far back as the month of May, you would observe how this level has been a major determinant of price action. Look at what happened here in the month of May. We saw buying pressure around this area. The same thing happened here in the month of June, before we finally witnessed the breakdown of that structure in the month of July. And since the breakdown happened in the month of July, price has continued to trade below the structure, hereby emphasizing the strength of the sellers at this point in the market. So at the beginning of the month, we had a breakout of the $1 mark area, which led to price coming back into that structure. And as you can see here, as soon as price got into the 1.03750 level, we started seeing a consolidation phase around this area, which is more or less characterized by a lot of selling pressure from that area. And if you look at the structure we have here, we have witnessed selling pressure here in the past, that is in the month of August. We also saw selling pressure around this area in the month of July as well. And with the selling pressure around this area, I'm of the opinion that price action might be going to the downside from this level. And in addition to this, we also have this level also sharing a confluence with that bearish trend line that has been holding selling pressure since the beginning of the year. So with the current situation here, I'm still tending towards a bearish momentum here, where the current structure might transition into a reversal pattern in the form of a double top structure, as long as price cannot break the previous high here. Well, I will be looking for a situation where price comes back into probably the key level here at the $1 mark area before we start seeing another wave of bullish momentum at this point. So since the beginning of the week, we have been looking forward to selling pressure around here. So what we did at the beginning of the week was to understand how participants in the market is actually relating to the 1.03750 level. And remember, we have the NFP coming up later on in this week. On Friday, we have the NFP, a very key event that is coming up. And obviously, we can see how participants are actually anticipating that event. And this can be seen on the chart as this consolidation phase that we have around this area. So if anything happens around here, is going to be very huge, it's going to be massive. So we want to be on standby so that we can take advantage of this move when it finally happens. Now, in as much as we are looking for selling opportunities here, that price might break down the structure to same price coming back probably into the $1 mark area, at least in the meantime. We should not ignore the possibility that price might continue to the upside here. So for price to go to the upside and for us to buy, I want to see price climb above the 1.03750 level, followed by buying pressure right above the 1.03750 or around the 1.03750 level to give me a signal that we might be going for a bullish momentum here. But if that does not happen and price continue to trade below the 1.03750 level, well, I'll be left with no choice than to look out for selling opportunities on my lower time frame. So with the information we have here on the daily time frame, let's scale back down to the 1 hour time frame. Let's see what is really happening here. Let's see what structure price action is evolving into, and let's use whatever we find there to make a decision for today. Now, scaling back down to the 1 hour time frame. So here we are on the 1 hour time frame. Sorry. Okay. So right back on the 1 hour time frame. This is where we are. And on the 1 hour time frame, the first thing we should observe here is this bearish momentum that we can see here. And after connecting the series of lower highs here since last week, we can see we had this bearish trend line figured out here, though we had a breakout here on Monday, which was a massive one, which led into a false breakout of the 1.0450 level. And remember, we have been enjoying this bearish momentum since the beginning of the week, right down to this level. Price broke down the bearish trend line one more time, and since then price has continued to retest that bearish trend line, hereby emphasizing the strength of the sellers at this point. We saw the same thing happen here a couple of hours ago, the same rejection of that level, which also shares a confluence with that 1.03750 level that we identified on the daily time frame. So sharp rejection of that level is more or less a sign that sellers are still very, very strong in this market. But we cannot ignore this buying up pressure that we have been witnessing here since the beginning of the week. So despite the fact that we have been seeing selling pressure, which is characterized by this bearish trend line, we can see our buyers are trying as much as possible to negate all the selling pressure around the 1.03 420, 1.03400 area since the beginning of the week. So like I said earlier, let's wait out for a breakdown of the 1.03420 in such a way that we have a situation like this, price breaking down below the 1.03420 level, an area where I said I will be looking forward to selling pressure after taking out all the buy position here to join that decline to the downside. So let's see how this is going to be playing out in the next couple of hours here. So for our selling pressure, if you had missed out on this opportunity right below the 1.03750 level, let's wait for price to break down, retest the structure on our lower time frame so that we can join that sell continuation to the downside. So now for our take profit target, well, like I told you on the daily time frame, I'm looking at the $1 mark area at this point, which is a long-term perspective here. If you look at how many pips that is going to fetch us, let's see how many pips that is going to be. Hold on a second. So we have the $1 mark area here. Hold on, let me project this out a little further. So we have the $1 mark here. So we should be having over 350 pips to catch there if price continue as far as that. But in the meantime, because I'm not sure if that the movement that we are expecting would is so huge that it's going to take a 350 pips move in the next 2 days. I'm not sure. So in the meantime, let's have our take profit target somewhere around the 1.02500 level, a strong psychological level somewhere around here, which should be giving us about 120 pips thereabout. Or we could extend it to as far as the 1.0100 level, wherever it may suit you. And as soon as price gets into the 1.02500 level, which I was able to identify around here, you move your stop loss accordingly, maybe probably somewhere around the 1.03150 level, and let's see if price will continue to go to the downside from that level. So these are my views here on the EURUSD, and let's see how price action plays out in the next couple of hours. Now, another thing I may mention here on the daily time frame is that We cannot ignore the possibility that buyers could take over this market, considering this demand zone that we have been witnessing here. So what we want to be seeing to buy the Euro USD is to see price take out the 1.03750 level, take out all the sell position here. Then we want to be seeing that as a bullish signal, or probably we could be looking out for buying pressure right above this area on our lower time frame. Then we could actually join the rally to the upside. But if that does not happen and price continue to oscillate below the 1.03750 level, I want to remain comfortable in my sell position. So that is my view here on the Euro USD. If you have any questions, feel free to drop your inquiries in the comment section, and let's see how I will be of help in that regard. So with that being said, let's quickly move on to the next pair so that I can treat all the pairs that we have been monitoring since the beginning of the week. So on the USDCAD, we had a profitable situation here on the USDCAD. In fact, I was able to close a take profit target at around the 1.36400 area with about 203 pips, and the second one closed with over 140 pips with a total of about 300 and how many pips that 340 pips there about total on the USDCAD, which is a very good trade for us as bullish momentum still exists here on the USDCAD. Now, for those who took advantage of this move here yesterday, kudos to you guys for being part of this profitable journey as we were able to close on a profitable note here on the USDCAD. Now, the important thing here that I showed you here yesterday was the 1.35 level, which is serving as the neckline of the reversal pattern we identified on the daily time frame. Remember, we identified the 1.35 on the daily time frame. I will be showing you in a moment, and we will finally witness the breakout of that structure, hereby confirming that the reversal pattern we actually identified on the daily time frame this week was a positive one. So let's quickly run through the daily time frame and let's see what I'm talking about here. So right here we are on the daily time frame, and so this is what we saw at the beginning of the week. So we had a situation here where we identified a bullish trend continuation pattern here after connecting the series of higher lows. So we had this resultant trend line, which you can see here. Well, in addition to that structure is the 1.32 Canadian dollar level, and look at how that level has been a major determinant of price action. So if you look at what happened here between the month of July and the month of September, we saw how the 1.32 level was actually holding selling pressure. So this level was negating or buying potential here for almost 3 months before we witnessed the final breakout of that structure here in the later part of the month of September. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that at one point in time, price is likely going to come back, do a retest of that structure to incite another wave of a bullish momentum. And this is exactly what happened here. And in fact, it took about 2 months before the retest of structure finally happened. So we witnessed the retest of structure here during the second week of this month. And one thing we identified here, or during the beginning of this week, was this reversal pattern around the retest of structure here, which came in the form of a double bottom structure, which from a technical standpoint is a strong reversal pattern. So we saw the first touch here, and price was unable to break the previous low, leading to a breakout of the 1.35 level to give us a good reversal pattern here. And one thing that will also make this reversal pattern very, very promising is if we can see price come back to do a retest of structure followed by buying pressure on our lower time frame, then we could actually add more position to our existing trade. So this is what we have running here at this point in time. We already have a breakout of that structure, which makes me more confident that we might be having a trend continuation to the upside from this level. So now that we have taken our profit on the USDCAD, let's see how far this retracement phase is going to go. So obviously, whenever we have an impulsive move like this, we expect that there is going to be profit taking activities. That is, those who took advantage of this move right from this level would want at one point in time want to sell off to make some money, and this is going to be reflected on the chart as a retracement of that impulse leg. So we want to see how far this retracement phase is going to go. Is it going to go to as far as the 1.35 level, which is the neckline of the reversal pattern, which also shares a confluence with this bearish trend line here to incite another wave of bullish momentum? That is one scenario we are going to be looking forward to for today. Or are we going to be seeing a outright trend continuation pattern around here? It could be a wedge or a bullish rectangular pattern breakout, retest of structure on our lower time frame, hereby sending price going further to the upside. So these are the two scenarios I will be looking forward to at this point. So in order to understand what is really going on around here, we'll need to scale down to a lower time frame and let's see what is going on there. So scaling right back into our 1 hour time frame. So what do we have here on the 1 hour time frame? So hold on a second. So let's see the structure we have here. So this is what we have here on the lower time frame, and this is the 1.35 level. That is the neckline of that reversal pattern we identified on the daily time frame. So that is the neckline there. Then we have the breakout of the structure. So like I showed you on the daily time frame, are we going to, how far is this retracement phase going to go? Is it going to go as far as the 1.35 before we start seeing reversal pattern here that will send out the second wave of that bullish momentum? So we don't know how far that is going to go. Well, from a technical standpoint, there is a parameter that we normally use to identify how far this retracement phase is going to go, and that is the retracement tool. So what we want to be doing here is to bring out our retracement tool, run it through the previous impulse leg, and we should be identifying somewhere within our 50% and the 78% of the previous impulse leg as an area we shall be looking forward to for buying opportunities. So here we are right now. So let's label this area for the sake of clarity. So we have the buy zone figured out here. So we have somewhere. So I would like to use this impulse leg as well. Sometimes I normally use the 2 impulse legs here. So I would adjust this. So we have a huge buy zone area here that we are going to be looking forward to. So this is what we are going to be looking forward to at this point, and it appears price is right within our demand zone here. So let's see how many pips we have from where price is now to the maximum point. So we have about 85 pips there. About, can you afford 85 pips? If you can afford 85 pips at your stop loss right now, you might want to join at this point. But if you are not, you cannot afford 85 pips right now on your portfolio, well, I will be advising us to remain patient and wait out for a reversal pattern to evolve before we want to be joining that rally to the upside. So we want to be patient and see how this candle is going to close, or a couple of more candles. Let's see how it's going to close before making the decision to buy here. So to make our job easier, I have identified a buy zone right within the 1.35400 area and the 1.34600 area, which also shares a confluence with the 1.35 level, which is the neckline that we identified on the daily time frame. So we are going to be looking out for buying opportunity around here to take advantage of the trend continuation to the upside. And so if we are taking advantage of this move to the upside, where will our take profit target be? Well, we want to be extending this impulse leg into the future, and the only way we can do that is by using our Fibonacci. By using our Fibonacci extension tool. And if we do that, we bring it out, run it through the previous impulse leg, and we aim at an area between the 127.2 and the 1414 area. So anywhere between the 127.2 and the 1414 area is a good area to look at. So we have a minimum of about 200 pips and a maximum of about 235 pips to catch here if price moves accordingly in our favor. So this is what we are going to be looking forward to on the USDCAD for today. So let's see how price action plays out in the next couple of hours. So that is that on the USDCAD. If you have questions, feel free to drop your inquiries in the comment section. So let's move on to the next pair, and the next pair I'm going to be looking at is the USDJPY. And on the USDJPY, we're already profitable on this pair as buying opportunity has started coming in here. So where were we during the live session yesterday? Well, we were around the 138.100 level here, where I told you that we already have a breakout of this trend line, and from a technical standpoint, we should be expecting that price will come back to do a retest of that structure. Though we had a breakdown of that structure to the downside, but we started seeing buying pressure around the 138.100 area to incite another wave of bullish momentum. So at this point in time, we took advantage of this move right here. I think I shared this on my public platform as well at the point of this entry, and price has been moving in our favor since yesterday with over 75 pips in profit at this point. So the next thing I'll be telling you to do right now is to move your stop loss accordingly, lock in some profit at your desired profit. But for me personally, I actually move my stop loss to my break even level somewhere around here, as I want to give room for price to move around before the possible bullish momentum could happen here. Now, going into the New York session today, what is going to be our plans, especially for those who missed out on this opportunity? We took advantage from this level. Well, at this point in time, the first thing you should observe here on the 1 hour time frame is that we have been witnessing selling pressure around the 138.800 area in the last couple of days now. So we saw as soon as price gets into that area, we have been seeing selling pressure coming in, hereby emphasizing the strength of the sellers at this point. And if you look at the current structure here since the beginning of the week, we can see that price has been caught within a consolidation phase between the 138.800 and the 138.00 level, emphasizing the indecision in this market at this point. And obviously, you know that when you see situations like this, participants are actually waiting for a catalyst that will drive price movement, giving us a signal of where price might be heading to for the week. Now, we have a couple of events coming up for this week, like I showed you on the economic calendar. So for today, we have like 3 events coming up today. We have the ADP employment, the GDP, and the Fed chairman is going to be having a speech too in the next 7 hours. So all these events was definitely going to be, the anticipation of this event is definitely going to be reflecting on the chart as price action. So we have the situation running at this point in time. So my advice at this area is that we remain patient here. So I have identified the 138.800 level area to make our trading activities very easy to take advantage of for today. So we have the 138.800 level. So I will be looking forward to a breakout of the structure, retest of this level. If you had missed the opportunity we took advantage yesterday, well, this could be an opportunity after identifying buying pressure above the 138.800 level on our lower time frame to join the rally to the upside. So this is how I want us to be trading the USDJPY at this point. So at this point in time, you can see this candle has closed above the 138.800 level, and we're beginning to see buy pressure here. So you might want to wait for like 5-10 minutes. Look at what is happening on the 10 minutes time frame, 15 minutes time frame. Look out for buying pressure right above that level. Then you want to be joining that rally to the upside. So for those who are already in this trade, move your stop loss accordingly. Ensure your stop loss is moved accordingly at this point. Now, in addition to the 138.800 level, so I want to make sure that our trading activity is easy this New York session today. So let us bring out our line chart. Let's connect the series of lower highs here. So I think I will see this as a breakdown of that structure. So we have this higher lows here, and we shall be using this as a yardstick for buying opportunity. So anywhere above this trend line is a good area for us to buy the USDJPY, and if price breaks down that structure, well, that might likely turn out to be a bearish signal. So we want to continue to look out for breakout retest of the structure, buy pressure around the 138.800 to join the rally to the upside, and if price breaks above the 139.600, a retest of that level also should be giving us another opportunity to add more position to this trade. However, if a breakdown of that bullish trend line happens in such a way that price takes us out of our position, retest of structure, selling pressure right below this level, well, at this point I'm still going to be wary of selling, as I want to see a breakdown of the 138.8100 level to sell the USDJPY. But if a selling pressure happens right below this trend line on our lower time frame, well, I'll be left with no choice than to sell the USDJPY at that point. But at this point in time, let's continue to look out for buy pressure right above the bullish trend line and right above the 138.800 level. So that is that on the USDJPY, and let me quickly run through the XAUUSD before I call it a day. I know Innocent Babe is going to be looking and saying, am I really going to run this pair today? Obviously, yes, I am. All right, so here we are on the XAUUSD. We entered the sell position. We've been experiencing a sell position since the beginning of the week. We had the position running right below the neckline area, had the 1755 level here. We took advantage of selling opportunities right below this level since the beginning of the week, which gave us over 3,000 pips on this one. And where were we during the live session yesterday? We were around here as well during the live session yesterday, and I was advising that we should take advantage of any opportunity right below the 1755 level. And price selling opportunity actually came in, and we had price move over 900 pips in our favor before we started seeing this bullish momentum, which appears right now to have taken out the sell position at this area. So are we going to be experiencing a buy from this level during the New York session today? That's a very big question we want to be asking ourselves at this point. So what I'll be advising us to do first of all here is to scale up to the daily time frame. Let's see what is really going on the higher time frame, and let's line up whatever we have there with what we have on the 1 hour time frame to make a decision for today. So let's scale up to the daily time frame here. And what do we have on the daily time frame? Well, on the daily time frame, the first structure we identified here on the daily time frame is that price has been on a long-term bearish momentum, as you can see here. And as a result of this, I was able to connect the series of lower highs here to give us that result and bearish trend line. However, during the early days of this month, we saw a breakout of the trend line, which also lines up with the 1680 level, a move which we actually took advantage of, which fetched us over 4,000 pips at the beginning of this week, of this month rather. And at this point in time, we are caught within a consolidation phase here, and we don't know what next the market is going to be doing as we head into the New York session today. So let's quickly look at the structure here. Let's look at what has been happening since the beginning of the year. Well, we have an important structure around the 1786 level, which has been holding buying pressure at the beginning of the year. We saw how that level was holding buying pressure at one point in time before we finally saw the breakdown of that structure in the month of July. And since price broke down the 1786 level, we have been witnessing selling pressure from that level, giving us a clue of how strong the sellers are. The same thing happened here the second week of this month. We saw selling pressure again below the 1786, hereby emphasizing how strong the sellers are at this point. So now going into this week, this is the structure we have here. So we have a structure at the 1730. Hold on a second. Let me see if I can do some readjustment to this level. Okay, so if you look at what we have here, we can see we have a structure around here. So this is going to be readjusted to 1740. So kindly readjust your charts if you have the 1730 on your chart. So we have 1740 around this level. So this is what I'm going to be using as my yardstick for this week now. So we have this 1740, and following this impulsive move to the upside here, which came into the 1786, and as soon as price tested the 1786, we started seeing selling pressure from that level, a level which has a memory for selling power, as you can see here. Since the month of July, we have been witnessing selling pressure from that level. The same thing also happened the second week of this month. We saw selling pressure from this area, which took price back into the 1740. And as you can see here, since the later part of last week, price has been unable to break above the 1760 level, as we started seeing selling pressure from that level, attempted by the sellers to push price further to the downside on this one. So looking at the structure we have here on the daily time frame, I will be suggesting that below the 1740 level should be an area where one should be looking forward to selling opportunities here on the XAUUSD, with the hopes that price would drop to as far as the 1680 level, where our buy zone is here, to look out for buying pressure to join the second wave of the bullish momentum that started started at the beginning of this month. So this is what I'll be looking forward to from a long-term perspective, that is priced below the 1,740 level. However, let's scale down to the 1 hour time frame. Let's look at what is really happening around here. As you can see, we have been witnessing selling pressure here since Thursday last week. We saw the selling pressure here, one, we saw another one here, we saw another one here, we saw another one yesterday, and we have today's candle running at this point in time. And let's see what is really happening on the lower time frame to decipher what is the next line of action. So scaling back to the 1 hour time frame, we want to see what is really going around the 1,760 level. So for the sake of clarity now, remember we had the 1,760 level identified on the daily time frame as an area where there has been selling pressure since the later part of last week. So I want to readjust this point to fit that structure we identified there. So we should be having a neckline at the 1,760 now instead of the 1,755. So we have the 1,760 level here. So we've been witnessing selling pressure around that area. Well, as long as we have been witnessing selling pressure below the 1,760, I want to be advising that below the 1,760 is another area we should be looking for selling opportunities for today. So if we are going to be doing that, let's have our stop loss somewhere. If you can afford around 600 to 700 pips stop loss, it's good for us at this point so that we can give room for price action to play out here. So there is a tendency that price might still come back up here, play around with some sudden pressure to evolve to a final breakdown of the neckline, retest of structure to send price back into the buy zone that we identified on the daily time frame. So this is what I'll be looking forward to at this point in time. So let's continue to look out for selling pressure below the 1,760 area during the New York session today, so that we don't miss out on this opportunity here. So for me personally, I'm not yet in this trade, but as soon as I close the session, I'm going to go down to my 1 hour lower time frame to look out for selling pressure, look out for selling setups to join that rally to that decline to the downside from this level. Now, the other scenario that we might be looking forward to here is if we have an outright breakout of the 1,760 level, that is an engulfing candle that takes us out of this position at this point. Remember, at this point, I'm not going to be getting too excited. Instead, I'll be scaling down to my lower time frame. Look out for selling pressure right above the, look out for buying pressure right above the 1,760 to join a bullish momentum back into the 1,786 level, a level which also has been holding selling pressure in the last couple of months here on the XAUUSD, and that might likely give us about 2,000 pips in profit here, but I doubt that's going to happen here, considering the fact that we have been witnessing selling pressure around this level since in the last couple of weeks here. So we have been seeing the selling pressure around this level here. So I'm of the opinion that we might be having another wave of bearish momentum. So let's see how this is going to play out for today on the XAUUSD. So that's my thought on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. I hope Innocent Babe is still in the house. If you are, let me know if you have any questions, and then I will be calling today from here. All right, so that's that. So let's quickly do a recap of what we talked about today before I call it a day. So the first pair we looked at today is the US oil, and what was our expectation on the US oil? Oh my goodness, price has continued to move in our favor, and currently if you are taking advantage of that move yesterday during the early hours of today from this level, you will be in how many pips in profit right now? Over 150 pips in profit. And if you took advantage of this one at the beginning of the session, you will be in about 45 pips in profit. So I will be advising us to move our stop loss right now to lock in some profit, or move your stop loss to break even, and let's see how price action is going to be relating to the structure. So like I told you here, anywhere above the $79.50 level or this bullish trend line is an area we want to be comfortable in our buy position here. So our take profit target still remains around the $85 level, and I told you that there is a catch here, that as soon as price gets into the $82 level, we want to move our stop loss, lock in some profit probably around the $80 area. Let's see how price action relates to this level. If it starts giving us reversal pattern, well, we might be thinking it might be a reversal pattern back into the $79 level to incite another wave of bullish momentum. And if a breakout of that level happens, a retest of structure with buy pressure right above the 82 should welcome additional position to our existing trade. So that is that on the US oil. Then we went on to talk about the US tech here. And on the US tech, we have been witnessing selling pressure since the beginning of this week, and we actually had a position running here since last week, which gave us over 360 pips here. We also took advantage of this move here yesterday, which also gave us about let's see how many pips was that from this level. That's about 150 pips thereabout, which is not bad for us or for this week. And now we started seeing selling pressure right around that demand zone that we identified at around the $11,500 level, and then we took advantage of the breakout retest of the 11,525 level, and we have moved our stop loss to break even. And if price takes us out of this position in such a way that it breaks down this bullish trend line, then I want to be seeing this as a bearish signal followed by selling pressure in our lower time frame. We could actually join that decline to the downside from that area. However, if price continues to the upside, we might be seeing selling pressure right below the 11,650 to incite another wave of bearish momentum here. So we have a structure here. We have this bullish trend line figured out, and I told you this is going to be our yardstick for trading activities during the New York session today. So if price breaks down that structure, that is a bearish signal for us to take advantage of selling opportunities around that area. And if you remember vividly how I explained to you how important that $11,500 level is here, where I said it will turn out to be a neckline of a reversal, a proposed reversal pattern here, in such a way that a breakdown of that structure happens here with a take profit target within the zone in anticipation of another wave of a bullish momentum on this one. So that is that on the US tech. Then we went on to talk about the Euro USD, where I still told you I'm still expecting a selling opportunity here. I told you I have a position running below the 1.03750. I hope you are in on this trade, and if you are in, well done. If you are not, let's wait for price to break down the 1.03420 level, selling opportunities, selling pressure right below that structure, then we could join that decline to the downside. However, if price takes us out of our position in such a way that price breaks out of the 1.03750 level, then buying pressure above the structure should incite a buy opportunity on the Euro USD. Then we went on to talk about the USDCAD, where we took advantage of a buy opportunity here at the beginning of the week, and we were able to close this trade. We had two positions running. We took this one here, we took this one here too as well, and it gave us about, the first one gave us over 200 pips, the second one gave us over 140 pips here. We took profit here, and we started seeing selling pressure right below the structure, pushing price back into this area. So what we said here is that we want to be looking to how far this retracement phase is going to go, and to make our trading activity easy during the New York session today, I was able to identify a buy zone which is around the 1.35 level, the neckline area of the reversal pattern we identified on the daily time frame. So let me quickly show you the reversal pattern on the daily time frame. So this is the daily time frame here. We identified this bullish trend line on the daily time frame, and we saw this reversal pattern here following this impulsive move. Price retested the 1.32, a level which was broken in the month of September. Price retested it, did this, came back, was unable to break the previous low, evolving into a reversal pattern, breaking out of the 1.35 level. And I said we want to see how far this retracement phase is going to go before joining another wave of bullish momentum here. So this is what I'm showing you on the 1 hour time frame. So let's go back to the 1 hour time frame here, where we have identified a buy zone around here, and price appears to be within the 50% retracement of this impulse leg right now. So I told you that if you can afford to have a stop loss of about 70 to 80 pips here, you could join outrightly from here. But if you can't, well, let's wait for price to give us a reversal pattern within this area. It could be a double bottom structure, it could be a falling wedge, it could be an inverse head and shoulder pattern. Then let's take advantage of a breakout retest of structure on our lower time frame to join the rally to the upside. Then we have our take profit target sitting around the 1.3700 level, which should be giving us about 230 pips if price moves in our favor. So that is that on the USDCAD. Then we went on to talk about the USDJPY, which we are currently running in profit right now. And I hope you took advantage of the breakout of the 1.38 level, 138.80 level here. Remember, I was able to identify the structure here where I said it will make things easier for us to take advantage of any trend continuation here. And for those who took advantage of this move here, ensure you have moved your stop loss accordingly, lock in some profit here. And I told you that price right above this trend line and the 138.800 area is an area we want to feel comfortable in our buy position. However, I stated that if price breaks down this bullish trend line, taking us out of the buy position here, then we might want to be seeing this as a selling opportunity after citing selling pressure right below the bearish trend line, rather the bullish trend line, rather, to join the decline to the downside. So that is one. That is the one on the USDJPY. Then I went on to close the day with the XAUUSD, and on the XAUUSD, we still continue to hold on to selling expectations here right below the $1,760 level. And as long as price continue to trade below the 1,760, we want to be comfortable in our sell position. But if price breaks out of the structure and we start seeing buying pressure above this level, well, the selling pressure there will be negated and a buy opportunity should be taken advantage of with a take profit target sitting around the $1,786 level. And I can see Innocent Babe asking what's the take profit target for gold is. Well, our take profit target still remains the same here. That is around the demand zone here, around the 1,735 and the 1,730 level. But there is a catch here which I shared with you yesterday, and that is this bullish trend line that we were able to identify here around the 1,745 level. And one thing I said here yesterday was that if price comes within this level, ensure you move your stop loss accordingly, lock in some profit, probably somewhere around the 1,750 level, and let's see how price action relates to that structure. So if we start seeing a breakdown of that trend line, then that's another confirmation that the sellers are still very strong in this market. Selling pressures below this level should welcome additional position to this trade. And if a breakdown happens, I will be extending my TP to the TP target zone, which we identified on the daily time frame, which let me show you again on the daily time frame here. Let's see. Okay, so we had a TP target here. We said we had this impulsive move identified at the beginning of the month, and we said if a retracement phase happen, price might likely come back into the buy zone area, an area which also shares a confluence with the $1,680 level, a key level which has been holding price action for 3 to 4 months here, and look out for buying pressure here to join the second wave of that bullish momentum. So that is what we are going to be looking forward to on the XAUUSD as a take profit target. I hope I've made myself clear there, Innocent Babe. So on this note, I want to call it a day. I really appreciate every single one of you. I really appreciate the time I had with you guys today. It was such a wonderful day, and I'm glad that we were profitable. We have been profitable so far for this week. So I wish you best of luck during the New York session today. And always remember that we don't want to get too excited whenever we sight a signal which might likely come in the form of a breakout of a structure. And if that happens, we want to quickly run down to our lower time frame. Look out for selling pressure or buying pressure, whatever direction price is moving towards to, before we want to be joining either the rally or the decline, whatever case it may be. So on this note, I wish you best of luck during the New York session today, and please remember that we have major events coming up today. Ensure you've moved your stop loss accordingly, lock in your position so that we don't want to get caught up in any sudden pullback in the opposite direction of where we are projecting. So do have a wonderful evening. I wish you best of luck, and bye bye.